Investors at the equities market are looking to banks for value today as banks led transaction volumes at midday today. Joshua Odebisi, Senior Banking Analyst at Vetiva Research, joins me to discuss investors' sentiment for this week. Joshua, thank you so much for taking the time out to join us today. We're seeing banking counters driving volumes at the market so far today. Bring us up to speed on this investment play that we're seeing.
Oh, thank you for having me. So I think that this is mainly being driven by the fact that we've seen some quite encouraging results across the board, especially from the tier one banks. We saw Zenith and GT Co a few days ago, and then we recently saw Access Bank as well. And they came out with a 22% dividend payout, with a total dividend payout of about 1 naira, but 70 kobo for their final dividend. And so this is really what has been driving the play, as we had expected. When these tier one banks came out with their results, we had forecasted that there would probably be some interest from the markets.
But I know that obviously there's always cherry picking amongst all the banks. So what is separating those that are desirable to investors and those who aren't? What are those metrics or fundamentals that investors are focusing on?
Well, I think that they're looking at what was a tough year, 2021. Obviously, after 2020, we sort of thought that the banks had been able to maneuver properly and, basically break the trend that we saw across the world, with a lot of banks reporting significant losses and, very high impairments. But it was just a delayed effect that we saw in the Nigerian market, and 2021 was really where we saw the combination of that, even though the CBN and the banks had come together to put together a bit of a forbearance to sort of kick the can down the road. The chickens came to roost in 2021, and that led to a little bit of a dip in performance. But overall, the banks that were able to really come out on top and still deliver solid performance, solid growth, whether it be loan growth or just growth in profits, were the ones that the investors have been really paying attention to quite recently.
In terms of loan book growth going forward, where do you see these banks playing, especially the tier ones? Are they going to remain with the conservative, the traditional sectors that they stick to? Or do you see them venturing out into more, do you see them being more ambitious or more adventurous this time?
Well, it's interesting that you asked that, because the way I see the market, what we're going to see is there will be some growth, but I don't think that it will actually be focused on the Nigerian market. For various reasons, this is a pre-election year. The economy is not in a great place at the moment. The Monetary Policy Committee has held rates quite low, and so it's not really attracting a lot of foreign investment. So we're not going to see that much loan growth in the local space. But the banks that have explored or expanded their tentacles outside of Nigeria, your Access banks, your UBAs, even to your lesser extent, your GT Co, those banks will see some growth from those markets, just because those other markets are not in the same economic situation that we are in, and they have a lot more headroom for growth at this time. So yes, there will be growth, but the Nigerian market is probably going to remain very, very cautious, very, very slow.
Well, still on earnings, what is the outlook for earnings from interest income versus non-interest income? I know the government obviously there's going to be some heavy borrowing at the domestic market this year. How do you see this playing out?
Well, there are a few ways that it could play out. What we've seen so far is that non-interest revenue has definitely propped up banks' earnings. We saw that with Access Bank very recently, even Zenith Bank as well, UBA. Now, on the interest income front, yes, like you mentioned, there is the potential for them to get some gains when the government comes borrowing. However, the rates at which the government is borrowing are still not as favorable as the general market. And so if we see any kind of improvement, it will come from loan growth, and it will come from growth in interest income from loans to customers, because the chances are the price of those loans are also going to go up. We saw a bit of a repricing in 2021, and potential is that there will be even a further repricing this year.
Now, on the issue of non-performing loans, I think I did hear the CBN say recently that NPLs are actually at very comfortable levels right now. They're actually low. What do you make of this, and how were they able to achieve this, and do you see this being sustainable going forward?
Absolutely. What we need to remember is that if we look at it, NPLs were trending downwards from 2020 all the way through, regardless of the pandemic. and the forbearances that were given really helped that a lot. Now, all the banks that have reported so far have reported pretty stable NPLs. I think Access Bank's NPLs were well below 5%, or about 4.4%. And I think that this is going to continue simply due to the fact that despite the economic realities on ground, most of these banks and the loans that they have, when you look at the oil sector, obviously it's doing quite well just due to the price of crude currently, even though there are still some issues with, evacuation of the product. But overall, I think that they're very comfortable with their models that they've run, and they see that there is very low potential at this moment for risk assets to get out of hand.